Hey, Robert, how correlated have you seen this and others in this space to the big cap names? I mean, there's so much money and headlines going towards the Intels and the Texas Instruments and the NVIDIAs and the Broadcoms and you name it. When those start to get hit, are these going to be hit as hard, or is it you going to see some rotation into these some of these smaller names instead?
I've
What's your
never.
expectation?
It really depends upon how strong the fundamentals are and what the valuation looks like. So, yeah, these if these guys put up good numbers and they're raising estimates into next year, you'll see a decline. You'll see an inline decline with the large caps, and that's because the fundamentals would be good and valuations low. Normally, these small caps trade, with a much higher beta, right? So you would see a much bigger decline for something that if they had messy numbers and or a very high valuation. So I would expect it if the S&P is down 10%, I would expect this to be down 10% in correction, not 20 or 25 like a lot of other small cap names that I trade because my long book is balls to the wall, risk on 100% of the time. I don't buy anything unless in my growth portfolio I have a stock that could 3 or 4x, with considerable, downside risk if the fundamentals don't deliver. So yes, I would say the relative performance in a company like this, you'll see because it will only drop as much as the large caps.
Yep. Okay. All right. What else were you looking at this morning? Anything on your hit list that you wanted to talk about?
Well, for me, one of my big five energy stocks reported enterprise products. They delivered mid single digit unit growth and revenue growth and all that, which for this company was a good outcome because they had guided to low single digit growth or flat growth. But there's a lot of energy demand from foreign sources, and these guys produce and ship a lot of LN or natural gas LNG. They process the gas that then gets turned into LNG in the Permian. So they sell a lot of propane. So they've picked up volumes from the Middle East problem and the volume, the closure from the Strait of Hormuz. So it's good, and they're talking positive about the rest of the year. So the pipelines and the processors are going to do fine with this. They don't have leverage to get 20% growth or 10% growth, but they'll if they were looking at 3 or 4, they'll get 6 or 7% growth. And in their business, that's a nice outcome. So I'm happy with the number. The stock had gone up a little bit to the 52-week high recently. But so I don't expect the stock to react to this, and the valuation is fair, but the numbers do support the move in the stock. And then
What's the
uh,
ticker on this one, Robert?
EP,
EPD.
the charts up on the
E,
page. EPP,
EPD.
Enterprise Products. Yeah, yeah.
Yep.
Now
Okay.
you remember I was a buyer of the dips because the dividend yields were very high the last 2 years. So I've
Yep.
talked about MPLX, Plains, Energy Transfer, those kinds of names in the past, and they're all at the high end of the range, and they're all more fairly priced. So I'm not chasing, but I'm happy that the fundamentals are catching up to the stock prices. So that's a good thing. And then finally, I went ahead and bought a starter position, in that LSI Industries, which I talked about in the past. LYTS is the company that makes the lighting fixtures and the display cases and graphics for convenience stores and gas stations and stuff like that. Um, I don't know. I was bored. I needed to buy a stock. I hadn't stock in a long time. So I bought a 1% position in LYT. It's at 20 and change a week or so ago, I guess it was, so a couple of weeks ago. They reported numbers. The numbers were solid. They grew 9% organically. They made an acquisition of a company that's going to add another 40% to revenue growth. So they're going to post really strong numbers as a standalone business going forward. And I have them making about $1.50 in the year that starts on July 1st of this year. So it's at 12. I'm paying 13 and a half times earnings for a high quality. It's not the best entry point. Normally, I was waiting for that 18 and a half, 19 to become 15 or 16. And I just figured, well, if I buy a 1% position, I probably increase my chance of getting there. And then I could buy another 3 or 4% to make it a five. A normal position with this would be about a 5% position. So I bought 1/5 of the stock that I want to buy. And if it goes right to 35, I'll sell it and declare victory, or 30 and move on, because at least I have something in the book. But it's a very good relatively high quality small cap management team, product line, competitive dynamics play where they're the 800-pound gorilla in the industry, and they can offer a full suite of services and products to the big companies and scale like, before, when 7-Eleven or, Wawa put up stores in places in different geographies, they had to deal with local mom and pops. And these guys were becoming a national scale company that could do a national rollout for Exxon's gas stations, that kind of thing. And then they're starting to take, material market share with this new deal. It even gets them, more, vertically integrated. And I would believe that they're going to have, mid to high single digit organic revenue growth, at least going forward. And in today's, stock market, for a non-AI related, non-data center related, business, that's pretty darn good. So it's probably worth 20 times earnings. So if they could do $2 in 2 to 3 years, I could see myself having a $40 stock.
Banks, so you're a buyer in the 15 to 18 range, it sounds like, and you're a seller north of 30. I hear that right?
Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.